Hello everyone and welcome back. Today I want to talk about stocks that are easy money. Sometimes you have opportunities that you know are great opportunities. Sometimes you have stocks in front of you. You know that the upside is phenomenal and the downside is very much protected. And let me spoil you the fun. Today we are going to talk about cybersecurity stocks. We are going to talk about maybe all of them, and I will tell you my favorites because now almost all of them have reported earnings. So out of all the cybersecurity stocks, I have my favorites, and I will talk about the numbers, the valuations, what I will buy, what I will sell, this kind of moves. I will show you some charts, the trends to monitor, and why I think this is easy money. Because a couple of days ago, you had some worries about AI that would potentially disrupt the cybersecurity industry. And you can look at specific stocks. I have CrowdStrike here, but all the cybersecurity stocks have dropped. You can look at the stock price down and down. On year-to-date performance, as I'm recording this video, this is down 10%. And when AI from Cloud, Anthropic announced a new cybersecurity project, CrowdStrike went down 15%. And all the cybersecurity stocks went down, and then they all reported earnings. So, of course, during this earnings report, they had to defend themselves. How is AI going to disrupt the industry? Or how is AI going to help the industry? And now we have the data because you had many worries. And what CrowdStrike showed us is that revenue is reaccelerating. Clients are still here and the demand is stronger than ever. So you have a clear dislocation in the market. Stocks went down because people panicked, but actually AI is a tailwind for these stocks. This is why I say it is easy money. And out of the bunch of all these cybersecurity stocks, which one is the best? Which one is the best investment for your style, depending on what you want? Okay, this is what we are going to talk about. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And I've been following the cybersecurity industry for a while now, and I first invested in cybersecurity in 2020 because the world stopped. People went into lockdown and the world became more digital. And it was quite shocking to me that all the cybersecurity stocks went flat in 2020. You can look at the past 10 years. Here's what you have. You have stocks that did not rebound for a while. Actually, I did not invest in CrowdStrike. I did invest in Fortinet. I don't know how long this video will be. I want it to be complete, so I think I will just take my time. If you look at the past 10 years of Fortinet, in 2020, look at this, it went down, it went up, and then in September, for a couple of months, Fortinet went down. It was absolutely crazy to me that as the world went into more digital, people used the internet more than ever. They were literally stuck at home. So now we are doing some work from home, Zoom calls. You need much more cyber defense. It was crazy to me that some cyber stocks went flat in this environment. So I bought Fortinet massively, and guess what? You wait a couple of months, the stock was a quick triple. And now cyber is down, Fortinet is down, Fortinet is hated. As you saw here from the local top, Fortinet was also down approximately 15%. And now, after the results, it is already rebounding. So I've been following the industry for a while. You have a lag between what is happening in real life and the perception of what people see in this market. And I think you have a lag today also. Not because the world is enjoying a lockdown like we have 6 years ago, but now because of AI. And people can't imagine the tailwind that AI is for this cybersecurity industry. So now I want to talk about the results, okay? I want to talk about CrowdStrike and the results, and then I want to list the other stocks because maybe you get some interest in cyber defense, but maybe you don't like CrowdStrike. So in this video, I will talk about several ones of these stocks. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. As I'm recording this video, CrowdStrike reported earnings yesterday, and the results were scary. People, if you go and check the mood of people, because CrowdStrike is software, people thought that CrowdStrike would be down 10%, and guess what? CrowdStrike ended the day plus 4%. So it seems like people were relieved because of this reacceleration. Anyway, look at the data. Record net new annual recurring revenue plus 25%, net new ARR plus 50%, operating income plus 45%, cash plus 40%. Everything is good. Everything is growing 20%. You have very nice margins. The free cash flow is okay. You have some adjustments to make. The business is in a great shape. I will just browse through the slides, but the idea is really simple. Everything is growing 25%. Everything is nice. All the clients are happy. All the customers are buying more. You have more and more demand. The cloud security, log scale, next-gen CM, next-gen identity, everything is growing 30% per year, 70% per year, 30% per year. Everything is fine. So all the worries people have about AI disrupting this industry, for the moment, are just fake. The ARR growing 24%, net new 25%, 20% revenue, 20%, free cash flow is up. The net retention is very high, sky high. Look at this, the net retention at 115%, which means all the clients are staying and they are buying more. They are spending more dollars every time they stay. So the gross retention rate is 97%. Almost everybody stays and almost everybody buys more from CrowdStrike. So you have stickiness, you have annual recurring revenue, and if you listen to the earnings call, they are extremely bullish. They say 2026 will be our best year. Like, everything is accelerating. The guidance is still okay. Everything is expected to grow at 20% per year. The revenue has stopped decelerating. As I can show you here, this is the red chart here is the revenue growth rate. During COVID, it was growing at 80% per year because the company was small. Anyway, the revenue is decelerating. Revenue was growing 30% per year. And then last year, 20% per year. Look at this. It seems like the downtrend has stopped. So there is a low plateau of growing minimum 20% per year. So you're telling me there is a business that can grow at minimum 20% per year, and this business is in front of the best AI tailwind, the best industry tailwind we've seen for the past 5 years. That's extremely bullish. This is why I say it is easy money. These companies will print cash. If the revenue can reaccelerate and we go back to growing 25% per year for 1, 2, 3 years, easy money. Despite this, I want to say, even after this reacceleration, the margins are still not declining. It's not as if they are buying their growth, because the gross margins are now at an all-time high for CrowdStrike, and the operating margins are not declining. Now, I am not an investor in CrowdStrike. Most importantly, because of this blue line, as you can see, the operating margin is negative. The company is not profitable. It's all about growth. So I am not an investor in CrowdStrike, but my point about reacceleration is still valid because I have checked all the earnings from all the cybersecurity companies and they all say the same thing. you can check Zscaler, you can check Palo Alto Networks, you can check Rubrik, you can check Fortinet, you can check Okta. They are all saying the same thing. Everything is reaccelerating, and now the traction is getting bigger. Okay, next point I want to check about the AI. I want to show you what the CEO of CrowdStrike says about AI and the potential disruption, the potential risk, because, I'm saying it again, all these stocks went down, and all these stocks are down in 2026 because people freak out. CrowdStrike CEO says AI security is already driving annual recurring revenue with, I believe that's AI detection and response, growing 5 times quarter over quarter, so large demand. And the company expects AI to lift demand across cloud security, next-gen CM, and attack surface protection. Okay, so here is the quote here. We are still in the early innings, but we continue to ramp in protection AI, and it's happening today in terms of annual recurring revenue growth. And we're obviously blown away of what we've seen with their AI tools. It was up 5 times quarter over quarter from when we acquired the company. So we are really excited about that. Second reason why I don't want to be invested in CrowdStrike, they focus on acquisitions, and I don't like acquisitions. But the point of growing demand is still valid. The other piece to keep in mind is that not only it is growing to drive AI detection and response growth, but we're going to see growth in protecting attack services like cloud. We're going to see growth in next-gen CM. We're going to see growth in other areas that all touch AI. So from that standpoint, I said early innings, but lots of opportunities for us. And I think with regards to hyperscalers, I'm glad you asked the question. The question is, why can't hyperscalers do the same thing and have their own in-house cybersecurity tools like Microsoft? I'm glad you asked the question because when I started the company in 2011, we pioneered Bob-delivered security. And all over the years, as cloud was maturing, I heard a lot about the hyperscalers actually providing all the security services. Well, that didn't happen. In fact, as you've seen with our results and our partnership with AWS from Amazon, as an example, we transact billions through these platforms, and they are a great partner, and there is a lot more exposure in the cloud. So we see the same thing happening, what I call AI hyperscalers, being able to actually partner with these hyperscalers, leveraging AI and their LLMs, and also being able to leverage the technology to provide better outcomes with the platform of record for our customers, blah, 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 etc., etc. So basically, plenty of worries. What if Microsoft and Google do their own cybersecurity stuff? Google just acquired Wiz for $30 billion, so cybersecurity company. CrowdStrike and all the other companies say that hyperscalers will not do their own in-house cybersecurity teams because you want the best for cyber. And to have the best cybersecurity, you need the best companies. CrowdStrike, Palo Alto Networks. So they are doing intense partnerships with all these companies. And also there was a worry about Anthropic. They mentioned Anthropic during the call. Actually, I can show you. There was a question, what do you think about Anthropic? What do you think of the role of Anthropic? I guess in general terms for LLM providers, they are pretty good, but not as good because for cybersecurity, you need defense, you need to act fast, you need real-time prevention, you have to be inline, you have to be able to get the data in milliseconds, you have to make a decision, and that is not the case with an LLM. A third point for this big worry about cybersecurity is when you have a cybersecurity problem, you need somebody to blame. And if CrowdStrike or any other company has a problem, a mistake, you can blame them, you can sue them, you can have a lawsuit. If you use Anthropic, if you use any LLM, you cannot blame them. Because for the use of LLM, if the LLM hallucinates, It's not their fault. It's your fault as the user. So literally, you cannot blame Anthropic or Gemini or ChatGPT. You can't attack them. And in this world with cybersecurity, if there is a problem, you need somebody to attack, to blame. Okay. The same thing is true for Moody's and their credit rating agencies. If the credit rating is wrong, if there is a mistake, you can attack Moody's or S&P Global. If the credit rating is from an LLM, you cannot attack the LLM. Like legally, it's in the contract. It's you, and when you use the LLM, you agree that there is a 1% hallucination rate. So it's your fault. You know the risks. So it's about reliability. It's about trust. It's not about who will be the most efficient. Well, first of all, CrowdStrike is more efficient. And two, it's just literally impossible. And these stocks went down 10-15% because of worries. Fair enough. Okay, if you look at the retention rate and the amount of dollars people spend, you can see that customers love CrowdStrike and people spend more. So as you can see, customers that are using 5 modules from CrowdStrike, this is on the rise. The blue is on the rise, the red is on the rise, orange on the rise, green on the rise. Stable here, but you get the point. All the metrics are accelerating. People are using more services from CrowdStrike. And then there is a great tweet from Eugene here showing you great charts. Revenue growth, I already showed you that the revenue is reaccelerating. What about the quarterly remaining performance obligation that's equivalent of your backlog? It has stopped declining. Look at this line here. I don't know if you can see well. It is rebounding and now reaccelerating. The annual recurring revenue is accelerating and still here. People are spending more, etc., etc., etc. And he is sharing a chart about the EBITDA. Well, you see that the EBITDA is negative. We already talked about this one. That's the reason why I don't invest in CrowdStrike. It is not profitable, so I can't value it. The business is great, it's a growth beast, but I cannot value it and I don't like this. Okay, but in this industry of easy money, you have several companies. I already mentioned CrowdStrike. If you go and check the report from Zscaler, you will find the exact same things, the exact same arguments, the counter arguments saying AI will not disrupt us. AI will improve us because we have much more demand right now. People attack much more. You have 6 times more demand right now. So it's not, now the attacks are in a matter of seconds or minutes. The frequency is much higher. And you need defense, so the budget is increasing. Zscaler is accelerating 25% per year. The billings growth was a little bit weak, like 11%, so maybe something to monitor for when it comes to the backlog of Zscaler. But anyway, the report was great. You can also check Palo Alto Networks. Same thing, everything is growing 15-20% per year. They just made an acquisition. The stock went down because of a weak guidance. The revenue guidance was great, because you make an acquisition, so of course the revenue will be improved. But the earnings per share, the EPS guidance was weak. Because guess what? You make an acquisition, so you have costs. So people freaked out, but people don't read the numbers. And this is where we have an edge as a retail investor. I have a master's degree in accounting, so I can find the numbers and interpret the data. And the fact that Palo Alto Networks sold off because of their change in guidance is absolutely stupid in my opinion. The revenue is up, the efficiency is nice, their unified platform mega app is working, and the CEO was a little bit upset because the stock was down. You can check the interviews from who's the CEO of Palo Alto Networks, Nikesh Arora. I think it's the case. Palo Alto Networks CEO, Nikesh Arora, yes, good guess. And that's a CEO that knows really well what he's doing. He joined Palo Alto Networks in 2018. He was working with SoftBank in the past. He is the king when it comes to merger and acquisitions for cyber. And I mean, they are doing a phenomenal job, and the stock tanked. So he was upset. You can check interviews online. He was really upset. I've never seen him so upset. And the stock went down. And now, guess what? It is rebounding for absolutely zero reasons. And the stock fell off for stupidity of the market, short-sightedness of the market. You have another player in the industry called the Rubrik. Rubrik is a company that is still young. They are in a niche market, but they have always beaten their own guidance, their own estimates, so they are growing a lot. AI will obviously help them, but they are not profitable. And they have a lot of SBC. I'm not a fan at all. So CrowdStrike, not profitable. Zscaler, not profitable. So I'm out. Palo Alto Networks is focusing on acquisitions. I don't like this. Rubrik is not profitable, so I don't like this. You have other players. You have Checkpoint Holdings. Checkpoint. What's the ticker symbol for Checkpoint Holdings? It's a legacy company in the hardware. CHKP. Same thing. The stock is dropping for zero reasons. KP. You don't have enough growth for this business. You have Fortinet, and out of these big boys, my favorite one of the bunch is Fortinet. I am a shareholder of Fortinet. It's a main position, it's a core position in my portfolio, and I can show you similar charts for Fortinet. I can show you that the revenue is reaccelerating. As you can see here, quarterly, boom, boom, boom. Revenue has stopped declining. You have more cyclicality, but now we are growing 15% per year. The margins are positive. The margins are high, and this is a business that is profitable. Look at this, operating margins of 33%. And out of the bunch, Fortinet is doing buybacks. Two of them are doing buybacks, but only one is growing. So, cyber stocks went down because of cloud and AI cyber services. Some things, I mean, Anthropic released the model, but there was already another company that did exactly the same model. I mean, what Cloud did was not new at all. You only had, I'm blanking on the name of the company, but there was another company that did exactly the same thing, scanning through your documents and finding errors. You already had this. And now, all the cyber companies reported earnings. They all say, one, AI is a tailwind. More demand is coming. Cyber budgets are increasing. The attacks are more frequent. The attack surface is immense. And out of the bunch, CrowdStrike is expensive. Zscaler is expensive. They are expensive on all metrics. Earnings, free cash flow, however you want to look at these ones. Palo Alto Networks is back to maybe fair value, but they're focused on acquisitions and diluting shareholders. Rubrik has no earnings, so it's very difficult for me to value it, and they have no long track record. It's a very young company, so it's more risky. Checkpoint doesn't have much growth, and they don't pivot into this AI industry, so it's a legacy company. And Fortinet right now is fair value. If you look at Fortinet right now, you can check I can say the forward price to free cash flow is good. They are net cash, so you can use the EV to free cash flow. Anyway, the point will be the same. When the stock dropped, you had the forward EV to free cash flow at 21. You don't have this kind of valuation a lot of the times, actually. Since COVID, since the world became digital, when I first bought in late 2020, it was roughly 20. And then in 2023, this valuation metric was at 20 again. It was a great buying opportunity once again. And then in middle of 2024, we went back to 20 again. It was a great buying opportunity. And now here we are. Plenty of worries that are unjustified, and the stock dropped, the free cash flow increased, so we are back to roughly 20. My strong guess is Fortinet is easy money right now. So I bought the dip. I mean, I did not buy when this metric was at 35. I bought when it was at 20, roughly 20, 22 anyway. I think it's easy money. Like, it's in front of your face right now. You have many risks, as always. No investment is perfect. It's not a crazy deal, crazy cheap opportunity with a P/E ratio of 8. Of course, it's growing. It's a quality business model. You have insider ownership for Fortinet. You have the CEO that is still the founder. The CEO and his brother, they own 15% of the company. They expect to reaccelerate. The guidance is conservative. They are doing buybacks right now, so the management thinks they are cheap. And I think it's easy money. People worry too much about AI, but I think AI is a clear beneficiary for this industry. So if you want to value these companies, if you want to value CrowdStrike, good luck. I can show you that CrowdStrike, here, look at the net income. CrowdStrike is not profitable. And the only reason they have positive free cash flow is because of a massive stock-based compensation, massive SBC. So actually, if you adjust for the SBC, the company is not producing any free cash flow whatsoever. So I don't like these adjustments. And as long as the company is not profitable, I literally cannot value it. So instead, what I can value is Fortinet that is producing free cash flow. And if you look at history, Fortinet has always grown free cash flow. Let's say roughly 15% per year. I can scroll down and see what I mean and show you what I mean. Look at the revenue growth trend up and to the right. Net income up and to the right. Free cash flow up and to the right. They are net cash, as you can see here. They have more cash than debt. They are very safe, very efficient, and they are doing buybacks. If you think the revenue will grow in the future, if you think the free cash flow will grow in the future, in the past 5 years, the free cash flow has grown at 18% per year. Let's say you think it will grow at 15% per year. And in the past 5 years, the average price of free cash flow was 30, 33. Let's say we are conservative and we use 25. In the past 5 years, they did 2% buybacks. Yeah, I think 2% buybacks is good, reasonable. If you think that you are a little bit conservative and the growth will not reaccelerate, we will just stay the same and be a little bit conservative on the numbers, then right now the stock is 24% undervalued. And if you buy right now, you can expect a 15% CAGR if you buy today. And now the stock rebounded a little bit as I'm recording this video. So, I mean, the stock rebounded, I don't know, 10%. But the stock was at $75 a couple of days ago. Now it's at 83 as I'm recording this video, which means if you bought the dip, the CAGR is higher. And keep in mind, this is a safe scenario and you get 15% per year. This is why I say it's easy money. On a safe scenario, you grow 15% per year. What if AI changes the world the same way COVID changed the world? And what if we have a nice reacceleration like we had for COVID in 2020? Maybe the growth rate will not be 15% per year, but 17% per year. And if you grow more, maybe you deserve a price to free cash flow of 30. And if this is the case, the business is 60% undervalued. And if you buy Fortinet right now, you have a compound annual growth rate, a CAGR of 21% per year. It is happening. This industry is misunderstood right now. Not all companies, not all stocks are worth buying right now. But for somebody who wants to do the work and who wants to invest in this AI-led work, all these stocks went down massively because of nothing, because of fear, because of emotions. And for all the rational investors that understand the psychology behind investing, that understand the numbers, You can choose your favorite. You can choose your favorite out of the bunch. I'm aware you have other players. I'm aware you have Qualys. I'm aware you have Okta. I'm aware you have Sentinel-1. That's okay. I mean, choose your fighter. Anything works depending on your style. Qualys is great also. Qualys is profitable. The guidance was a little bit weak, but things are fine. They are doing more buybacks. Okta and Sentinel are here and saying the business is strong. So yeah, you have plenty of ways to invest in cybersecurity. I think this industry is in a very well position right now, very good position right now. And for those who are doing the work, you can make 20% per year. Easily. If you invest in a nice valuation, if you know what you're doing, you invest at a good price. It's very interesting. Very interesting. And if you want to know more about Fortinet, I made some videos on my channel covering the earnings report. Like, these are long videos. So I am sharing everything on these videos about Fortinet and the earnings report, analyzing the numbers, showing you my own work to show you how bullish I am for the company. So out of the bunch, Fortinet is my favorite, but the whole industry will improve. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn my strategy to generate 25% annual returns. You will learn how to find winning opportunities. You will learn how to properly value any stock, when to buy, when to sell, so that you can build a strong portfolio filled with great companies. Additionally, inside this coaching program, you will have access to an exclusive community of like-minded investors, and also you will have my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need for your email address, just click the link in the description and I'll see you on the other side.